Be Wealthy and Smart, episode 1019.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about how to become an accredited investor, because I've gotten some questions about this, and I think it's time we start talking about it. Today we're going to talk about special investment opportunities, and this is something I talked about in my new book, 3 Steps to Quantum Wealth. The idea is that there are private companies that you can invest in. They're not yet traded on public exchanges, and so you can invest in them early. And by getting in early, you're able to hopefully get in at a discounted price from what they're going to eventually sell for when they have an IPO or initial public offering on the public stock exchanges. Now, while what we're going to talk about does require you to already have a certain amount of wealth, even if you're not wealthy yet, I think you need to learn about wealth before you have your wealth. And that's why you shouldn't be turned off by anything that is requiring you to have a certain level of net worth, because that's exactly what you need to be learning about. And it's exactly the right time to be learning about it. Also, with the cryptocurrencies that we're investing in, you might just become wealthy before you think you will. So that's another reason to get up to speed on things that you'll want to invest in when you do have more money available. And third, on the podcast, I'm helping you build wealth and financial freedom. So I'm going to do my best to get you to these levels so you can qualify as an accredited investor. So becoming an accredited investor means that you meet certain requirements set by the government. This is not something that the companies that offer these investments require you to do, so much as it is something that is already law, that you have to be at a certain level with your net worth before you're allowed to take, quote, more risk in some of these earlier privately owned companies. Some of these companies are high valuation startups or even unicorns, which are companies that are worth $1 billion or more. And you're able to invest in them, again, before they go to the public market. Past examples of the investment platform that we're going to talk about today, linked to, has allowed you to invest in include Coinbase, Robinhood, SoFi, and Impossible Foods. Those are companies that you're likely familiar with, and you could have bought them while they were still private before they had their IPO on the stock exchange. So I want to share with you something from 3 Steps to Quantum Wealth that I wrote about investing in early stage businesses. This is from page 47, and it falls under the myths category where I address some financial myths. This was myth number 6, don't invest in early stage businesses that compound at high rates. Again, because we are warned that this is risky and only high net worth investors are able to take on this kind of risk, that is what the regulators are doing by requiring you to have more net worth to be able to invest in these kinds of investments. But here's what I had to say about why this is a myth. Besides leveraging, money managers are also able to compound at high rates by investing a portion of their funds into venture capital, angel investments, and private equity, startup or early stage pre-IPO businesses. These are commonplace for institutions, endowments, and ultra-high net worth clients. Why not you? The industry response is it's too risky for the everyday investor. But these investments generate some of the highest returns available, much higher than stocks in many cases, meaning stocks already trading on the stock market. What is wrong with investing only 1% to 3% or 5% of your long-term investment capital in a diversified group of them? These are investments that are early stage, so the compounding rates are much higher than after they have grown large enough to go public and sell shares of stock in initial public offerings, IPOs, on the stock market. Institutions like Goldman Sachs, JP Morgan, and Morgan Stanley have started offering their high net worth investors investments in cryptocurrency. Endowments, hedge funds, family offices, and other institutions are now investing in cryptocurrency. I think they see the impressive returns and lack of correlation with stocks, meaning they move up and down independently of one another, so it is the perfect complement to a stock portfolio. High net worth investors like family offices, which typically have $50 million or more in investable assets, and hire managers and administrators to take care of their financial needs, are typically early investors in successful asset classes. It is like they have their own wealth mentor scouring the planet for the best returns, and they invest early. 15% of family offices are already invested in cryptocurrencies. The typical brokerage firm gives its richest customers the best performing investments first. Retail investors with smaller amounts of investable assets are usually offered the investment last, years after institutions and the ultra-high net worth investors. That is why I think if you pay attention to what I'm saying now, you can almost get in at a venture capital stage, before certain cryptocurrencies become the dominant technology and before a big wave of money that I believe will be created in digital assets in the next 5 years and beyond. What is exciting is you can build your wealth to $1 million beyond the value of your home, so you can become an accredited investor and also invest in venture capital opportunities in the future. Another way to expand your wealth building, money engines, and compounding opportunities. Again, to be clear, this is for a small portion of your portfolio. I believe you can tolerate volatility in assets when 1. They have excellent performance numbers long term, and 2. They are a small percentage of your investment portfolio. I am not suggesting you put all of your money into high-risk assets. Please refer to my asset allocation model in Chapter 9 for suggested investments and percentages in your portfolio. All right, so there you have a little bit about what I'm talking about today with becoming an accredited investor. So we're going to use the company Linqto, Linqto, as an example of how to become an accredited investor and what they require. We're going to talk about how you actually can meet the qualifications. There's 4 ways you can do it. 1, with your net worth. To become an accredited investor, you need to have $1 million of assets outside of your primary residence. So you could use real estate, or your retirement accounts, or your crypto accounts, or stock accounts, or a combination thereof. You just need to have $1 million of net worth outside of your primary residence. The second way you can qualify as an accredited investor is to have income of $200,000 as an individual, or $300,000 jointly with your spouse for the last 2 years. The third way you could qualify as an accredited investor is to be in the financial industry and licensed as a Series 7, a 65, or an 82. The fourth way you can qualify as an accredited investor is to get a letter from your accountant, attorney, broker, or banker that you have $1 million of net worth outside of your primary residence. Any one of those ways will get you qualified to be able to invest in private companies through Linqto. And you know, one of my favorite companies to invest in that I've invested in personally is Ripple. And Ripple stock is still available on the Linqto platform. The interesting thing about Ripple stock is that recently Ripple bought back some of their stock from venture capitalists who had provided rounds of funding for them in the past, and they bought it back at a $15 billion valuation. However, the price that they're being offered at on Linqto is at a $7 billion valuation. So you're getting a 50% plus discount by buying Ripple stock on Linqto. When you invest in private companies, many platforms require a $100,000 minimum initial investment. But what I like about Linqto is, again, they are setting a new standard by only requiring a $10,000 minimum investment. So it really allows you to diversify on their platform among different companies if you'd like to. And of course, diversification is one of the ways that you can mitigate risk. So you might be thinking, oh, there's a lot of fees attached to this, right? Well, let me read to you from the Linqto website. It says, Linqto sources deals and marks them up so that there are no further follow-on fees for the investor whatsoever. While fees have historically been very high in private markets, we at Link2 are proud to offer a zero-fee investment management platform. Link2 has no continuing management fees or expenses, no brokerage fees, no carried interest, nothing. I am so impressed with Link2, I'm considering investing some of my money in them as a private company because they are also a choice on their platform. So whether you want to invest in Ripple or Link2 or some other exciting private company, I think this is a great way to do it. And becoming an accredited investor, if you're not already, should be a goal that you set for yourself. I definitely think you can get there sooner than you think, especially by investing in cryptocurrencies, in my opinion, because the compounding rates have been so much higher. And as I talked about on the last podcast, cryptocurrencies as an asset class have been the number one performer for the last 10 years. In other words, they've been the best place to compound your money. So if this is something you'd like to do, I have a link in the show notes. If you use my link, you'll get a $250 investing credit toward your first investment with Link2. So whether that's Ripple stock or another company that you want to invest in, it gives you a nice little credit. Also, Link2 from time to time offers some bonuses. Recently, they offered a $1,000 XRP bonus when you bought Ripple stock. So you can also look for the bonuses that Link2 provides. The best thing to do is to go ahead and apply. If you are already an accredited investor, get your account set up. And if you want to wait for one of the bonuses to be offered, then wire your investment funds to Uphold, which is where they want you to deliver the funds from to invest in Link2 in order to receive the bonuses. Then once you've set up your account on Link2, when you're ready to make your investment, it will automatically show you Uphold and your funds there as one of your choices for where to withdraw your funds from. And you just select Uphold, and Link2 will automatically transfer those funds into your Link2 account. So it works very seamlessly, it's very easy to do, and that's the way I've invested with Link2 several times. So, in my opinion, becoming an accredited investor and making some investments in private companies is a great way to diversify your portfolio for a small portion of your assets. Again, 1%, 3%, 5% of your assets, I think makes a lot of sense to invest in private companies. Do your research, investigate the companies before you invest. Make sure that there's something that you really understand and you agree with, and you see their vision for the future of their business. You really want to be up to speed on what you're investing in and why. And if you want to learn more about how to invest in cryptocurrency to get yourself up to speed and potentially reach the level of an accredited investor, check out my new book, 3 Steps to Quantum Wealth, The Wealth Heiress's Guide to Financial Freedom by Investing in Cryptocurrencies. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.